Hello guys, I think that almost everyone can own Ferrari. What kind of a feeling did you experience when you saw a Ferrari car on the street? I believe the majority felt a bit jealous and might be asking who is that person who drives that car. But we can always look at it from a bit different perspective. Why don't we own a piece of a Ferrari business so that we take a part of the profit when wealthy people buy a Ferrari car? I believe that almost everyone can afford to have a bit of the company's business. So I suggest to have a deeper look at the company. And they recently released their earnings results on February 10, 2026. And let's have a look at the highlights. So these are the main figures. The revenues came in 7.1 billion euros. EBITDA was 2.77 billion, and industrial free cash flow generation was more than 1.5 billion of euros. And this number is quite important, and later on I'll explain why. So revenue growth was 7%. EBITDA margin was 38.8%, and this is the kind of automotive business where the general margin would be around 10%-ish. Also, I paid attention to this statement that they got a strong order book extending towards the end of 2027. So it's for the next almost 2 years. And how do we know if this is a lot or it's quite a few? Let's have a look what Google Gemini says, that historically Ferrari liked to keep from 12 to 18 months waitlist, and let's go back to 2022. It was roughly 12 to 15 months, and it's kind of standard. Then next year almost 2 years, but it was a post-pandemic time, which was a bit different to previous years. 2024 it was almost 1 year of order book, and now we've got 22 plus months. So it's a kind of a record for the company if we don't consider this post-pandemic time. So looking back at the numbers, I paid attention to the industrial free cash flow, which was above 1.5 billion of euros. And why is that important? So you can see that the Ferrari is considered to be as a kind of cash machine because they usually take deposits years in advance, meaning they often have the cash before they even build the car. And if this free cash flow is growing faster than earnings, the stock usually follows next. And just imagine, they didn't even start building the car, they've got already money in their hands, but it's not obviously the whole price of the car. They take it in parts, but still they've got quite cash even before the production. And let's have a look what the company is doing with the money they've got before they even build the car. They widely use the share repurchase program. Have a look. During the earnings period, Ferrari confirmed the launch of a massive 3.5 billion multi-year share buyback program, which is expected to run through 2030. So the company is already in the middle of 250 million initial phase, and it was interesting to see that they completed the old plan just a bit in advance. Have a look. One reason the stock rallied after the earnings report, by the way, yeah, the company went up roughly 20% during the next few days after the earnings report. It was the news that Ferrari completed its previous 2 billion euros buyback program a full year ahead of schedule. Their massive cash generation, over 1.5 billion euros in free cash flow, allowed them to finish the old program early and immediately roll into the much larger 3.5 billion program. And just let me remind you that the share buyback means that the company wants to buy their own shares because they are quite confident in their business, and they probably think that the price now is very attractive to what it offers. Also, it's quite interesting when you research the company that this detail about the new 3.5 billion of the share repurchase program, it was not included in the earnings report. I could find it in the Capital Markets Day in one of the press releases, where you could see a statement was down below there. It was like almost hidden, let's say. You can read it: start a new share repurchase program of euro 3.5 billion to be executed from 2026 to the end of the plan, in line with the progress of industrial free cash flow generation. Alright, after we knew about the buyback, we are also interested in the guidance for the next year, because what they achieved already, it's, let's say, in the past. They managed to do it. Okay, they proved once again that the company is profitable with the high margins. What do they expect for the next year? They expect the net revenues around 7.5 billion of euros, which is, it's my mark, which is roughly 5% plus to the 2025. Then look at the margins. They still plan to keep more than 39% margin of the EBITDA. Then they expect the EPS to be more than 9.45 euros, which is roughly 5-6% in comparison with the previous year. And again, industrial free cash flow is going to be above 1.5 billion. So these are the projections for the next year, and this is what we can rely on, more or less. And usually the company is within their outlook or slightly above. Then when we speak about the company business, I usually look at the board of directors. So I always look at the background of the company CEO, and his name is Benedetto Vigna, who is Chief Executive Officer. So I made a quick research and found out that he has been with the company approximately 4.5 years. And before he was appointed as a CEO in 2021, Benedetto Vigna had never worked for Ferrari or any other automotive brand, so I found it quite interesting. But he spent his entire 26-year career at ST Microelectronics, a semiconductor giant, and it was quite interesting move from Ferrari perspective, because the person was like from the outside, not from the automotive segment. So I was wondering, what did he do in the previous company? And it's mentioned that Vigna was the president of the analog, MEMS and sensors group. And under his leadership, STM Micro became the world leader in MEMS, which is tiny sensors. At one point, they held nearly 50% of the global market for these chips in mobile phones. And this is what mentioned about the company performance. STM Microelectronics was doing exceptionally well during his final years there, from 2016 to 2021. So now we know a bit more about the company leader, and under his leadership, the company was doing quite okay. So he started roughly in here, and then it was a nice move upwards. So this is where the company reported just recently. The stock price was around 280 euros. The company's stock price moved quite steeply high based on the results, the guidance, and again the buyback program. Now they moved from 280 euros to 330 euros. And here you've got the price to earnings ratio trend as well. And you can see just before the earnings, it was on the very low ratio value. It was roughly 30. And let's have a look how it was historically behaving. Ferrari's price to earnings ratio is currently trading significantly below its 5-year average. While the market usually prices a Ferrari like a high growth tech or luxury stock, the current discount reflects some cooling sentiment. Current PE is around 33 and 5-year average is from 45 to 50, and the historical peak was in 2020-2021 where it was 68. So for most of 2023 and 2024, Ferrari sat comfortably above 45, and the current drop to the low 30s is a level rarely seen over the last 5 years, typically only occurring during the broad market sell-offs or specific luxury sector anxieties. Because we can relate the Ferrari to both segments. First of all, for the automotive segment, and next for the luxury sector, which is mostly belong to the second one. And both of them are struggling at the moment. If we have a look, let's go to pseudo luxury company Porsche, which is struggling quite a lot. You can see how it went down dramatically. And also, if we speak about the luxury segment, let's go to Louis Vuitton, for example. The company also had quite a lack of investor attention for the last time. Okay, coming back to the Ferrari, what do? I don't own any of the shares at the moment. I was looking at the stock just before the earnings and I'm happy with their results. Now my actions would be that I'm going to monitor, and now it's actually the good moment is when you know what they achieved, you know their guidance, and my experience shows that the market always gives an opportunity in the future and gives some correction phases, and this is the point when you can start building your position. So whenever the company will come back to under 30 euros range, I'll be glad to start building the position, and I would be glad to become a co-owner of the Ferrari business, and I would like actually to see more and more cars on the street, knowing that I'm going to be involved in the company's business. Don't get me wrong, I don't think the company is traded extremely cheap. It's just less expensive as it was before. The company went down from the recent highs quite a lot and the stock has cooled down, but ideally I'd like to see when the stock price comes back to this range, and I would be glad to start my position. For those who would like to go deeper into the earnings report, as you know, it's available in their webpage in investor relations section, and there you can go through more details, more numbers, and you can see how they sell their models by the region, by the pillar, and then how their revenues are being formed. Also, you can see their models range. Wait a second, where it, and you can see their track record here with the models. So there is quite a lot of useful information. I went through it all. Also, I paid attention to this graph. Have a look how their net debt was decreasing year after year. From 2018 they were decreasing their debt, and today it's just half of their EBITDA. And also here the net industrial debt also is close to zero. And by the way, let's have a look at the company statements here. Look at their balance sheet. The total equity from 2019 is going all the way to the up. If we have a look at the income statement, again, operating income was increasing all the time. Then net income also going up all the time. If we have a look at the total common shares outstanding, it's coming back to the share buyback program, you can see how the quantity of shares being reduced from year to year. So even though the company is growing at a very slow pace, roughly 5-6% year over year, it's still growing consistently, and they are also paying dividends. The dividend yield is quite low, it's roughly 1% all the time. They're paying 30-ish% of the net income. So you can add this dividend yield to the company's earnings as well in the form of return to the shareholders. It would be a fair question of why would I want to pay such a quite a high price to earnings ratio, which is above 30 for this kind of a slow growing business. But I think it's more about the quality and the brand of the company. Yes, the company is traded at the premium because it's the luxury segment, and the margins of this business are very high, and also the company order backlog is well known few years ahead, and this is why you pay the premium. Alright, that's it from me for today. As I mentioned, I consider to add this company to my portfolio, but this is not a recommendation for all of you. Make your own research, and if you are happy with the company's business and with all the risks associated with the business, then make your own decision as well. But by saying in the beginning that everyone can afford it, it's actually what I meant is that the one share of a company at the moment costs just 325 euros. So I hope everyone can afford themselves at least one share of this company, and to let their business work for you instead of buying the car and bring the money towards the shareholders. Alright guys, have a great day, and this is it from me for today.